Fusion Mobile, quality e-learning experience on the go.
Stock Exchange and Second-Tier Securities Market (SSM). Stock exchange market is a highly organized market where investors can buy and sell existing securities like shares, stocks, debentures, gilt edge, etc. The stock exchange market ensures that every transaction must follow prescribed set of rules and regulations which are complex in nature. Quoted companies are organizations whose shares are quoted in the stock exchange market. The Nigerian stock exchange market is in Lagos with branches in Abuja and Port Harcourt. It was established in 1960 through the Act of Parliament. Some of the companies quoted in the market are the Nigerian Breweries PLC, the Guinness PLC, the Nestle Food Nigeria PLC, the First Bank PLC, the Union Bank PLC, etc. Stock exchange is an avenue for raising capital. This is because companies and governments raise capitals through the stock exchange. Stock exchange provides information on investors. Stock exchange facilitates transfer of investment from a company to another company. Stock exchange provides an avenue for people to invest in any sector of the economy. It provides yardstick for measuring performance of companies, as only sound and efficient companies are quoted on the stock market. Stock exchange leads to the increase in standard of living. Some functions of stock exchange include 1. Fund mobilization. This is because through the stock exchange market, which is a part of the capital market, fund or capital can be raised or mobilized by companies and investors. Investors can buy and sell old securities like stock, shares, etc. Stock exchange facilitates the transfer of ownership of shares between investors. Stock exchange provides avenue for government to raise funds. Stock exchange market provides professional advice to investors on sales and management of securities. The market is charged with the responsibility of providing rules and regulations that would ensure smooth operation on the floor of the stock exchange. The stock exchange market ensures that the companies quoted in the exchange have good reputation. In the course of our study, we have to note shares of well-known companies are known as blue chips, while gilt edge refers to government stock. Contract note. A contract note is a document sent by a broker to his client to confirm a purchase or sale made on his behalf. A transfer form is a document used to transfer ownership of debt. Broker. A broker is an agent who is professionally engaged in the purchase and sales of securities in exchange for commission, called brokerage. Jobber. This is a member of the exchange who is the actual dealer in securities. He transacts with the broker. Security. These are investments which are traded in the stock exchange in order to yield income. There are different types of securities, and they include shares, stock, debentures, bond, gilt edge. Shares. Shares can be defined as an individual portion of the company's capital owned by shareholders. A share also represents the mechanism by which the shareholders of a company can have limited liability. A stock. A stock can be defined as the bundle of share or mass of capital which can be transferred in fractional amount. They are always fully paid. Debentures. A debenture is a document which acknowledges a loan, generally under the company's seal, bearing a fixed rate of interest. A debenture usually gives security for repayment of loan as well as interest. It can be described as a document setting out the terms of a loan to a company. Bond. A bond is a security issued by a government or its agency or private institution as a means of raising funds. Bonds are usually due to be redeemed at some future date, and they carry a fixed rate of interest. The gilt-edged. Gilt-edged is a security issued by the government. It has a fixed rate of interest. This type of security is considered to be very safe as government cannot fail to pay its debt. Gilt-edged carries a minimum issued risk in terms of repayment. Some factors that affect prices of securities are: 1. The forces of demand and supply. 2. Activities of speculators. 3. Rate of interest on securities. 4. Political situation of a country. And 5. The instability in prices of shares. Speculation. Speculation is the purchase of security by speculators in the hope that its price will rise and that profitable resale will thereby be possible. There are 3 speculators in the stock exchange, and they include the bull, bear, and the stag. The bull is a speculator on the floor of the exchange who buys securities with the hope that the price will rise and that he will sell at a higher price for a gain. The bull will wait for a time of general rise in prices of security. A market is said to be bullish if it is keen to buy. A bear. This is a speculator who expects prices of securities to fall before delivery dates and thus sells out to make good profit. Bear is a name given to a speculator who sells stocks in anticipation of a fall in price of security. A stag. A stag is a speculator who applies for new issues of shares and stock in large quantity with the feeling or anticipation that prices of the shares will rise above the offer prices. The stag hopes to make profit after selling. Some terminologies used in the stock market and SSM are the arbitrage, the contango, the backwardation, the ticket day, the account day, the bearer securities, the inscribed securities, the issuing house. The arbitrage. The arbitrage is the practice of switching funds from one market to another in order to exploit price or yield differentials. The contango is a term used when a member wishes to postpone or carry over settlement of transactions to the following account, does so on payment of interest on the sum due. The contango. This is a charge paid by a speculator for different settlement from one account day to the next on account of shares purchased. Backwardation is a payment made by a speculator to the buyer when he is unable to deliver stock to the buyer on the agreed date. The ticket day. This is one of the 2 days in which the broker passes to the jobber the ticket which shows particulars of transaction. Within the date, arrangement for final settlement on account day can be made. It shows the names of the investors, details of shares purchased, and the price. The account day. The account day or settlement day is the second day on which settlement of transaction is completed by the transfer of money due for securities purchase. The bearer securities are securities which are transferred by handing them over without change of registration. This kind of security is one in which possession is regarded as proof of ownership. The holder is the legal owner. The inscribed securities. These are securities in which certificates are not given to the buyer. The ownership will only be documented in the register. Issuing houses. Issuing houses are financial institutions which specialize in making public issues of shares on behalf of public limited companies. The issuing house takes up the entire or large part and offers it for sale at a slightly higher price. Let's also consider the advantages of SSM to the companies. Advantages of SSM to the companies includes 1. The market provides opportunity for buying and selling of shares of companies. It is an avenue for companies and investors to raise more capital. Availability of short and long-term funds to companies can lead to expansion in operation and prospects for growth. SSM also assists and complements the efforts of the stock exchange market. SSM provides financial advice to companies in areas to invest their funds. SSM saves advertising costs when shares are being floated. SSM is set up to enhance investment avenues and the development of the Nigerian economy.